Welcome back, Pip Warriors, to Rocky Channel. Today we are going to talk about a special strategy. Takashi Kotegawa, commonly known by the nickname J-Com Man, is one of the most famous individual traders in Japan, with an ordinary background, not even working in the glamorous Tokyo financial district. But he silently turned his initial capital of only about $13,000 into $153 million in just 8 years. Wow. This achievement brought his name beyond Japan, making the financial world marvel. The nickname J-Com Man is associated with the J-Com event in 2005, one of the most famous accidents in the history of the Japanese stock market. Mizuho Securities entered the wrong order. Instead of selling one share for 610,000 yen, they placed an order to sell 610,000 shares for 1 yen. Takashi took the opportunity to buy when the price fell sharply, and then sold when the price recovered, earning a massive profit of up to hundreds of millions of dollars in just a few hours. Many people say Takashi was lucky, but if we consider the chaotic context at that time, he actually researched the market of each industry very carefully and was calm enough to make a decision to seize the opportunity when all other traders were terrified. So what method did Takashi use to find potential stocks and commodities to trade? Did he combine indicators for support? Or what is the specific trading strategy of this Japanese legendary man? All will be answered by me in a single video today. If you have been following me since the beginning, I firmly believe that just by watching once, you will understand the essence and be able to apply it immediately. Because I have simplified Takashi Kotegawa's method according to the foundational knowledge system built throughout the Rocky Channel. And if you are a beginner, rest assured, I will try to analyze clearly and detail every step so you can catch up. Without further lengthy introductions, let's start right now. First, I need to talk about Takashi's trading style. There are many records from Japanese financial newspapers quoting that he was both a day trader trading intraday and a short-term swing trader, opening and holding positions for 2 to 6 days. According to Takashi's shared reason, it's because he wanted to limit the gap risk when the market opens the next morning. Next is the method to find potential stocks and commodities. Takashi set out a number of criteria that must be followed. 1. Focus on stocks and commodities that are in a long-term downtrend but must decrease gradually and have high liquidity, avoiding huge slippage. The price dropping too sharply like the chart on the left is not acceptable. The price must decrease at a steady pace, like the chart on the right. 2. Accurately determine the bottom of that downtrend to get the best profit from a short-term reversal. Oh, the buy the bottom, sell the top theory? Simple, right? But it's easy to say. Practicing is a different story. So what specific criteria helped him solve this buy the bottom, sell the top problem? In an interview on the BBS Bulletin, Takashi shared that he only considered stocks that were at least 20% lower than the 2-5-day moving average. For those who don't know, a 2-5-day cycle corresponds to a standard trading month. If the low hits the 35% threshold, that is a safe level to buy in. He continuously repeated this step to search for potential stocks and commodities. I will quickly guide you on how to check a stock considered potential on TradingView. First, turn on the moving average indicator, then adjust it to 25 days. To measure the distance from the price to the moving average, we use the ruler tool as follows. Up to here, we can simply understand, Takashi will wait for the price to pull back to a potential buying zone. And if the price at that time is at a distance of 20 to 35% from the 25 moving average, then look to buy. The safest should be the 35% threshold. But he himself admitted that his search method encountered a small inadequacy. Not all types of commodities react the same way. In other words, whether the price pulls back to the potential buying zone depends on many factors. Typically, the general market sentiment at a given time. An example for you to easily see. The price of gold from the end of August until now has continuously increased. And of course, many investors predict gold will continue to rise. To be safe and avoid FOMO, traders and long-term investors will wait for a price pullback before buying. But in reality, up to today, the gold price keeps increasing continuously, not pulling back to potential buying zones. The second typical factor, The price volatility of each commodity type also depends on the internal nature of the sector of that commodity itself. Stocks in the technology sector will have much stronger volatility compared to stocks in the utilities sector. The two typical factors I mentioned above are not only Takashi's problem, but it is also the problem of countless other traders. This requires years of battle experience in the financial market and a level of sensitivity to each commodity sector. You cannot just see the 35% threshold and apply buying to everything. But that's a story that is too advanced. In this video, I will only focus on guiding the exact method Takashi confirmed using most effectively. Takashi has a philosophy that many Japanese traders still pass on to each other to this day. Just looking at the chart cannot win. Look at how orders move. To understand more clearly, meaning he doesn't use many complex indicators to trade. If some of you have ever watched foreign videos about Takashi using MACD, RSI, or Bollinger Bands, that is just them simulating with similar indicators so viewers can easily apply them to real combat like a machine. In fact, there is no official article or information confirming this. He preferred observing simple charts, the true behavior of the market, that is cash flow volume, momentum force, and price action. Coincidentally, the above points are the foundational knowledge system spanning across the Safe Trade channel. I have always tried to convey it in the most understandable way through each video, with the desire to equip a foundational knowledge system for those who have been, are, and will be following the channel. And now, I will go through each step of setting up Takashi's entry system. Step 1. Turn on the XAUUSD to recognize the general trend of the market. For those who don't know, XAUUSD is the trading symbol representing the exchange rate between gold and the US dollar. In the trading world, this is one of the most liquid and volatile products. Most stocks tend to fluctuate in the same direction. This may not be 100% accurate, but the majority of the market follows it. For those trading forex and crypto, use the US 500 index to see global market trends. Takashi particularly favored observing markets with a downtrend. So having an overview of the entire market trend is very important to him, just like you wouldn't want to spend many hours checking every single stock going up or down every day. Step 2. Determine the market structure and the strong buying-selling zones of a specific stock. This is the CMG stock chart of CMC Corporation in the technology sector. Every time I mention CMG stock, I always wonder why they didn't set the ticker as CMC after the name to avoid confusion. Anyway, let's focus on analyzing the price movement structure. Looking generally with the naked eye, you can also see the prices moving in a gradual downtrend, but the rate of decrease is slow, not too strong. This is exactly Takashi's first stock selection criterion. Going deeper into details, in the furthest stage, the price created a descending structure with lower lows, lower highs. Following that is a sideways phase, forming a rectangle pattern. Ending the sideways movement, the sellers prevailed and broke down. In the current stage, the price created a bottom and bounced up, moving to determine the buying, selling zones. That's all you need to know from part 1 of this strategy, but don't take your eyes off the screen because the real important part is in the next section, where I'll reveal the secret to maximizing your TP. Pips hunters, see you soon in Trading Rope.